Hey, hello investors. Welcome to the channel. For today's video, I'm going to be going over the why, the when, and the how when dealing with LEAPS option in your portfolio. In case you did not know, LEAPS option is one of those option strategies that's going to allow you to magnify your portfolio gains in a very short period of time while being extremely safe. So, if you're new to options, this is definitely one option strategy you may want to consider being part of your options portfolio. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's option video, we're going to be going over the when, the why, and the how when dealing with LEAPS option strategy. LEAPS options is one of those option strategy. It's like the gift that keeps on giving. Now, you guys know how we do it on this station. Before you get into any option contract, always make sure you have an exit strategy. The second thing, always make sure you do your own due diligence before investing. Don't take the word of anyone, especially not anyone on YouTube. So, despite what anyone has tell you, there's only one way in order to learn options, and that is to practice. That being said, let's go ahead and get down and dirty with options. So, for today's video, we're going to be using Micron Technology, ticker MU. And now we're going to go ahead and get the option chain open by clicking the Trade MU options to the bottom. Okay, so here we are on the Micron option chain. For those of you that are new to options, or for those of you that are not quite familiar with options, this here is what's called the option chain. Now, what the option chain does is that the option chain gives us enough information in order for us to make an informed decision before getting into any options contract. Now, the why for LEAPS option. Whenever you're doing options, it's always in multiples of 100 shares. Each option contract is always multiplied by 100 shares. So if you were to do any option strategy with Micron, you must first be able to do two things. You either need to own 100 shares of the stock or you need to control 100 shares of the stock. Now, if you were to own 100 shares of Micron right now, it would cost you around $9,200. Now, how did we come up with the $9,200? Well, it's quite simple. It's going to be the price per share, which is $92, multiplied by 100 shares, and that's going to net you $9,200. Now, this option is not very feasible if you're trading with a small account, especially if you're trading a small account, let's say under $10,000. It's not very wise to have the majority of your portfolio tied up into only one option strategy or one stock. So, the alternative to that is going to be to control 100 shares of the stock. So there's two ways you can control 100 shares of the stock. And one is by doing a cash secured put. And that too is going to require you to also have $9,200. If you guys are not familiar with the cash secured put, feel free to go ahead and check out any of the videos on the channel on the cash secured put or CSP. For today's video, we're going to be focusing on the LEAPS option strategy, and that's going to allow you to control 100 shares of Micron at about less than 1/3 of the price. So that is the first why. Why a LEAPS option? Because it's going to allow you to control 100 shares of the stock for a lot cheaper. So it's perfect if you're trading with small accounts. Now, another why to get into LEAPS option is because the exponential value that it's going to bring to your portfolio. And that we're going to see as we go along into the video. So let's go ahead and jump into the how. And as we're doing the how, we're going to go over a couple more whys. And to the end, I'm going to explain to you the when. The when is of integral importance before getting into any LEAPS option. So the how. In order for you to get into a LEAPS option contract, you must first go ahead to buy and call, and then you need to choose an expiration date. Your expiration date is going to be based off of your own risk tolerance and preferences. In order for a LEAPS option to work, your expiration date must be between 6 months or further out. For my own personal risk tolerance, I like having an expiration date of around a year or above. So we're going to be going with January 16th, 2026, which gives me around 341 days to expiration. Now, when buying a LEAPS option, you have a choice. You could either buy your strike price out of the money, or in the money, the choice is yours. Once again, that's also based on a personal preference. Now, in order to maximize the efficiency of this option strategy, it is highly advisable that you choose your strike price below the current share price. So for today's video, we're going to be using the strike price of, let's go with the $80 strike price. So should I acquire a LEAPS option at the $80 strike price? I would have to pay for it because we're obviously buying something. When if you buy something, there's some kind of payment that has to be made. The payment we're going to be making is going to be $25.30 per share. Now, right off the bat, you can see another why. The why we previously explained was you get control 100 shares for much less. In the first instance, you see buying 100 shares would cost you $92.04. In this case, by doing a LEAPS option, you're now able to control 100 shares for $25.30. Let's go ahead, we're going to click into it, and voila. A LEAPS option, also known as a long call, LEAPS stands for Long-Term Equity Anticipation Securities. Now, it is a mouthful, that's why we refer to it as a LEAPS option. Now, here's a fun fact. If you have one contract, it's going to be a LEAPS option. If you have several contracts, it's still going to be a LEAPS option. The acronym does not change. So that right there is the how to buy a LEAPS option. Now let's do a quick summary of how to buy a LEAPS option. In order for you to buy a LEAPS option, you need to first go to buy and call, and you're going to choose an expiration date based on your own risk tolerance and preference. After you do that, you're going to go ahead and choose a strike price below the current share price. Once again, that's going to be based on your own risk tolerance and preference. Once you do that, you're going to see that the price you're going to have to pay to control 100 shares, and I keep stressing controlling as opposed to not owning, there is a difference. The price you're going to have to pay to control 100 shares is going to work out to be a lot less than if you were to buy 100 shares at the current share price. So that is the how. Now we're going to go back a couple more whys, and then we're going to go to the when to buy a LEAPS option. So another why someone would want to get into a LEAPS option strategy is because of price appreciation. As you guys know, there are several different stock market strategies out there, but the best stock market strategy out there is a buy and hold strategy, and this has been proven time and time again. Now, the LEAPS option act as a buy and hold strategy because once you're able to purchase a LEAPS, the whole intention is that you're going to keep it in your portfolio for a long period of time, hence the expiration date. You're going to need to give yourself enough time in order for the share price to go through the different price fluctuations over the course of this option contract. So the why we are talking about is going to be the stock price appreciation. If you were to purchase a LEAPS option at the $92 share price and you paid $25.30 for that, if the share price were to go up by just $1, then your overall option contract is going to go up by whatever the delta is. And don't worry, I'm going to go ahead and show you that right now. So the delta for this strike price is going to be 0.73. So if the share price of Micron goes up to $1 to now $93, then this contract is now going to be worth $25.30 plus 73 cents. So let's round it up just to be easy. So now your contract worth is going to be $26 per share. So right off the bat, you're going to make $73 in your option. You bought it at $25.30, and now the cost is now $26 per share. Now that is the share price appreciation in its simplistic form. Now I'm going to show you how it really helps to magnify your portfolio. Let's say the share price moves from $92 to $102, and you guys would know this is possible if you do your own due diligence. As you can see, this stock has hit 102 several times. So that is not far-fetched for this stock. So that would be a $10 increase in this stock. If the share price increases by $10, now your overall option is going to increase by your delta multiplied by 10. So it's going to be $73 because remember, each option contract is multiplied by 100 shares, and then you're going to multiply the $73 by $10, which is the share price appreciation. Now, your overall option contract and your portfolio is now going to be up by $730. And that is the power of a LEAPS option strategy. Now, I'm going to get into my why of why I love using the LEAPS option in my portfolio. Whenever you do decide to purchase a LEAPS option, and you have it in your portfolio, the best strategy is to set it and forget it. Just leave it alone. The stock market has shown that it always keeps going up over time. So if you were to purchase a LEAPS option and do nothing, you will make some kind of investment gains because the share price will go up. That's almost guaranteed. Now, if you like me that like to get consistent income, then there's a strategy you can add to your LEAPS option. And we're going to go ahead and do that right now. So we're going to be assuming that we own a LEAPS option in our portfolio, which we picked up at $25.30 for a total of $2,530. So now what we're going to be doing, we're going to be using our LEAPS option in order to do another strategy. And for that, we're going to go to sell and call, and we're going to be changing our expiration date. Once again, expiration date is going to be based off of your own risk tolerance. So I'm going to be going with the February 21st expiration date, which gives us about 12 days. Now, my personal risk tolerance, when I'm trading this particular stock or stocks of this nature, I like to go 2 weeks out. For some other stocks, I like to do weeklies only. So once again, as you keep going on with options, you're going to be able to make these decisions on your own. Now that we have sell and we have call and we have chosen a strike date that suits our fancy, now we're going to go ahead and choose our strike price. Now the strike price I will be going is going to be the 103 strike price. Now with the 103 strike price, that's going to give me a chance of profitability, as you can see here, which means it gives me a chance of 90% that this trade is going to go in my favor. And because I'm using my LEAPS option in order to do this option strategy, I'm going to be paid a premium. The premium I'm going to be paid is going to be 0.43, or once again, each option contract is multiplied by 100 shares. This is going to be $43. Now, you can choose any strike price you want and you will be able to receive a lot more money. However, on this channel, I like to make consistent income, so that's what I always support. So I do not mind getting $43 on a consistent basis while I wait for my LEAPS option to appreciate in value. That's another why for choosing a LEAPS option, because of the exponential aspect it brings to your portfolio, and also the amount of strategies that can be used just doing your LEAPS option alone. So one strategy is going to be your buy and hold, and another strategy is going to be selling covered calls against your LEAPS option. Now, the when. The when is of integral importance because you cannot just go ahead and just purchase a LEAPS option. The right time to buy a LEAPS option is when a good stock is in decline and it shows clear signs that the share price is in an upward trend once again. For instance, if I were to buy a LEAPS option right now, I would buy a LEAPS option on MU, or I'd wait a couple of weeks to make sure there's clear signs. MU has shown clear signs that it has pretty much bottomed out, but that is not good enough for me. I'm going to wait until it shows it's going to go up before I pick up another LEAPS option. I do have LEAPS option on MU in my portfolio. So there you have it. The why, the when, and most importantly, the how to do LEAPS option strategy, and how to use a LEAPS option in your portfolio in order to get consistent income over time, and how to pick up a LEAPS option that's going to cost you a lot less than if you were to buy the stock outright. We also learned in this video how a LEAPS option is going to work perfect with a small portfolio because of the reduced barrier to entry. Now, if you guys got any value from this video, go ahead, like the video, subscribe to the channel. But most importantly, if there's anyone out there struggling to grow a small portfolio, then this is going to be the perfect video to share with them. We specialize on helping people grow their small accounts portfolio because we were able to do it, and I'm pretty sure you can do it too. Thanks for watching, and until the next video, pushing your investments.